It's 10 after. Oh, where's the disclosure? There it is. So let's jump right in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. The position disclosure here keeps getting smaller. It's getting smaller. 9 stocks left. Wow. Can't remember the last time I had less than 10 stocks in there. But yeah, I got out of that. I got bailed out of that Bed Bath & Beyond mistake from yesterday. So I got out of that for a small loss between yesterday and today. And I got out of Pinterest today, which I'm also looking at re-entering. I'm looking at re-entering, honestly, everything that I've gotten out of. I traded Microsoft also again today, but I liquidated it by the close. But the ones I'm out of from recently, Microsoft, Pins, Snap, Shop, I will look to get back into those after some price and time correction, should that ever actually happen, because this market has been incredibly strong. Honestly, today is incredibly strong, even with that insane Russia-Poland news that came out. Let's take a look at where our indices are. SPYs are up 0.8%. Qs are up 1.3%. Russell's up 1.4%. So certainly a really strong day today. Once again, SPYs are actually up the least, which is fine. Let's go over to our daily chart technicals real quick before we look at this 5-minute chart. So we had the PPI today. The PPI came in light. It missed, but like a lot, which is also great. Just more signals that inflation is starting to come down as we've kind of expected, and that can help the Fed with their argument of moving towards a pause, like we have talked about. So it sets the stage for further continuation. But the question that I really posed in the morning meeting today is, yeah, that PPI came in light, which is great, and I feel like if we were still down at 375 because PPI was coming out before CPI, it would have been a really, really strong day. But the question for today is, what degree of continuation can we really get after that CPI? Like, how much of those lowered inflation expectations are really priced into the market? And you have to couple that with, once again, the degree of upside extension from this market after just having such a big upside move. Like I keep saying over and over again, whenever the market is becoming more than $10 extended from the ADMA, it becomes really difficult for us to get continuation without at least some sort of price or time correction. And that is what was happening going into yesterday's session, right? The high from 2 days ago, yesterday's high, we were at that $10 plus worth of extension, couldn't get continuation. Yesterday we did not close well, we kind of closed on lows. Yesterday's candle looked like we were setting up for more price time correction. And then of course the PPI came out today, and that number just completely ripped us up. But could we really get further upside extension? Could we get up to that 200-day? Could we even break the 200-day in a relatively small period of time, like today or tomorrow? The answer is yes, if some serious momentum is coming into the market, because people are still really caught wrong-footed. Everybody's in cash, everybody's hedged, everybody's short, the same stuff that we've been talking about, though I would argue it's probably less so after all this volume on the CPI. So the question that we were trying to balance was a question of momentum versus expectations and extension, right? Momentum means that a stock that's already extended to the upside can go up even further. It means that a stock that's irrational, if you want to call it that, can become even more irrational, or in this case, a market. Extension dictates that can't continue forever, and price and time correction has to occur. So which one is going to kind of win the battle today when you throw in that solid PPI news and just how much they beat by, or how much it was, less than, I should say, how much it missed by. There really was the potential for that degree of momentum to come in today, and we actually saw it in bits and pieces with the IWM, which also at the end of the day is giving us a big doji. But this IWM was kind of crazy because I was initially concerned by the way in which they sold us. I talked about this pivot low here as something you could go long versus, but have your profit expectations appropriate, because I felt that off of this candle's low, a new intraday high was pretty low probability, even though that actually occurred. just given the way that they had this kind of momentum selling in the beginning of the day, and given how extended our big picture is. Yet we still were able to make that high. So it just shows you that this Russell was really strong at a certain point, and when this broke highs, you had to be thinking like, wow, is the entire market going to try to go here? SPYs couldn't really make highs. SPYs made that little bit of a lower high there, but wow, can this entire market go? Can the SPYs really actually work their way up to the 200 day? And can we get that momentum? And then from that point, the market kind of just died out a little bit, right? The IWM couldn't really continue its set of higher highs and higher lows. The SPYs were giving a whole bunch of sideways price action here. The Qs were giving sideways price action here. And keep in mind, in this degree of extension, sideways price action is broadly going to be more bullish than bearish. The market moving sideways helps to settle over time a lot of extension that we have, both in things like that short-term tactical sentiment that we pay attention to, and also it helps to settle extension on different technical time frames, like our daily chart with enough extension, or especially like a 5-minute chart or a 15-minute chart. So we had this sideways price action that was interesting. We were holding, albeit at some points barely, above that PPI 8:30 a.m. number low, which I always point out as being a really important spot that you want to pay attention to when you're just thinking about small time frame technicals. Like, forget about your daily chart extension for a second, even though you should not forget about your daily chart extension because that is an important layer of probability. On the small time frames, as long as we're holding above the PPI low, you're going to broadly be better off being long than short. If we lose that, you might be better off being short than long, or at least being a little bit more neutral. So the market here for the S&P was barely holding above that with this pivot low, but was digesting above it. And then we had this crazy news hit, and a big shout out to I think you used Michael Z in here, in the VTF, for being first on actually giving that news, saying, hey, I'm seeing some kind of headline come out about Russian missiles landing in Poland. And that was enough for me. Very early in this candle, I shorted some TQQs, because my thought process was like, it's obviously a terrible headline, and I really thought that the probability of that headline being true was actually pretty low. But it doesn't matter, right? I've got longs on. If that headline actually is true, it could mean a very big fast move down on the marketplace. And honestly, with the degree of upside extension that the market's showing us to begin with, I have no problem having some short exposure, right? It's like we're $10 extended. I am looking for a signal to be able to get short. There really was no signal to be short anywhere in here. This market was just consolidating. This could have broken up. It could have broken down. But technically, it's finally actually starting to break down. You're giving me this headline that's hitting at the same time. I'm like, okay, fine. I'm gonna short some TQQQ, and the price I was able to hit on that was like 23.26, I think, on TQQQ. So you were so early on that headline that I was able to short like right here. So really good call out on that, because that ripped this market completely apart, at least for a small period of time, as you would expect it would. You see a headline on Russian bombs landing in a NATO country that could be a very big deal, or not, if the news isn't real or there's more to the story. And eventually it did appear like there was more to the story. If Ukraine actually shot that missile out of the air, and then like the parts of it or whatever just happened to land barely on the other side of the border, and it's obviously very unfortunate that it killed a couple of people there. But that doesn't seem to be like, Russia is unleashing bombs after Warsaw or something like that. So yeah. Big shout out to Michael there for getting that information out very early and not being afraid to put that into the VTF. You beat Patrick, our news robot, on that. And you saved me a bunch, because I was able to kind of whack the TQQQs short there, so I was able to be hedged out for this entire down move. And then I was calling out as we kind of went into the gap fill here, and as we were getting pretty extended, I felt that even if we were going to continue lower, that with this degree of extension, it's the same extension rules that I'm talking about on a daily chart, except on a small time frame. you just get like whatever this is, 7 red bars in a row, and now on the 5-minute chart we're trading at 395 with the ADMA at 397. I'm coming in and I'm doing a little bit of nibbling back to the long side. So, you know, I love how this price. You know, I love that we got the news early, and then how this price action kind of subsequently worked. I actually would have preferred for us to even go down a little bit further, but I was able to come in and buy some Amazon, some Apple, some Microsoft, some, you know, decent little trades, nothing huge, because, you know, it's kind of add backs on the way down type of situation. And then I was able to get this bounce back to equilibrium. The one mistake that I made today was I wanted to add, you know, first of all, like CNBC was so slow on the news. It was kind of insane. This entire move happens. I don't think CNBC announced it until this bar, I think, until the 155 bar. So we had this news for like a full like 40 minutes before CNBC even reported on it. But into the snapback and equilibrium off of this pivot, I didn't just add back. I added back, honestly, and added. So I added for like a second trade in here, and I took that kind of heavier. And that was before we saw again the news that eventually did rip us higher here, which is that it got shot out of the sky. So I added as a new trade. So on the new trade, I actually lost money. But on the original trade, I was able to make money, and I was really glad to be able to be hedged on the way down, and I was grateful for the opportunity that I was able to get to, you know, buy some Apple and some Microsoft and some Amazon, you know, pretty close to lows here as the market was able to fill its gap for the snapback and still have some of that stock. But I was a little disappointed with myself on how, like, this was not a bad trade to short off of this pivot. The mistake that I made personally was the difference in how aggressive I was. Like I had enough stock here originally to hedge myself, not to make real profit off of this down move, but to make sure that I'm not really getting hurt on the longs. And I covered, I think, twice on the way down, and the rest of it I was like, you know, I'm just going to hold the rest of this as an insurance policy. And then when we got the snapback to equilibrium, I'm like, okay, I've seen this show before in the bear markets, where we get this pivot into equilibrium, and this is my lower high, and it leads to a lower low. So I shorted very aggressively into that pivot, and I was also able to get some covers here, but I was super greedy on it, and I ended up actually losing money on that second trade. And then I look back on it after I got stopped out of everything on the way up, and I no longer have a T-triple-Q short at all. And I was like, I probably made a game planning mistake on just degrees of aggressiveness on the first trade versus the second trade, which I could have done a better job of. So I wasn't super happy with how I traded it. But still, again, big shout out to Michael for getting us that information so early and enabling me to be able to short that T-triple-Q into that spot. And then, you know, my thought process on why I got as heavy as I did was the extension on the daily chart. Because again, it went back to, and this is the mistake though, because I should have been heavier earlier. It went back to like wow, we're so extended on this daily chart that I would want to be short anyway. So like, even if this news turns out to kind of be, I don't necessarily want to call it false, but not all it's cracked up to be, which is kind of what eventually happened, and this market was able to catch this bid and you know, hold in honestly very well. I am very comfortable when we're $9 extended. In this case, I prefer to be more than $10 extended, but when we're $9 extended on the daily chart in this, you know, like 398 to 399 area, I'm very comfortable being heavier short, because I can make money there no matter what if I manage the positions right most of the time because of that degree of extension. And then I ended up, you know, stopping myself out of everything because this market was just so strong. And that's honestly the most impressive thing to me about any part of today, was how well we held in between 215 and the close. This market had every excuse to be able to go down lower. Even if, you know, that Poland news is not like, again, I don't want to call it fake because it's obviously very real. I'm going to say not all it's cracked up to be, because it wasn't like Russia specifically was going out of their way to drop missiles into Poland. the market has every reason technically to want to be able to pull back off of this degree of extension, and then we gave it an excuse to be able to do so, fear over war escalation, and it just did not happen at all. So that's the most impressive part to me about today, honestly, is how well we closed in. And then at the end of the day here, we're left with a doji candle, and it's not a bad candle, to be honest. It's not a super bullish candle either, but considering this degree of extension and the news that came out on the second half of the day there, we easily could have closed at lows or even worse than lows and just kind of continued a price correction, and this market still held up. At the end of the day right now, we're at 398 quarter. The ADMA is at 390. So we're extended to the upside by, let's call it $8 here in the SPYs, which is extended, but not as extended as we were at the end of the CPI day or on Friday last week. So the market actually is as strong as it's been even yesterday and today. This is actually part of a cooling off process. These moving averages are catching up. A little bit of a doji here that this helps us. It helps us to build out our setups a little bit. That's the SPYs. Qs are a similar picture. They're actually probably a little bit more extended at this point. The Qs are, $9.50 extended as of the close from the ADMA is what it looks like. And it's the same thing with the Qs, like the $10 worth of extension. Even though it's a cheaper ETF, it's got higher beta and more volatility. So that same $10 tends to apply. So the Qs are still more or less kind of in that area. And the IWM has been a little bit weaker overall, but that's probably not the end of the world like we've discussed, because you got a little mean reversion going on. I just think with the Qs catching up a little bit to the Russell after we had such a huge divergence between like the Dow versus the IWM versus the SPYs versus the Qs like we've discussed. So that's kind of where we're at for the market. From a big picture game planning perspective, I hate saying that today was a less is more type of trading session because we had that PPI. But the PPI is actually what made it a less is more trading session. Before the PPI came out, we were set to have a small common gap to the upside, and there were some trade setups out there that I liked. I was looking at, path as a potential trade versus yesterday's high, but that ended up being too far away from us by the time the market opened. I was looking at workday as a trade versus yesterday's high. That ended up being too far away. Amazon versus 100 would have failed, but I personally never got involved in it because it ended up gapping up too big. So that actually was probably beneficial. Snap was another one. I ended up just kind of not getting involved in any of this stuff because the market ended up gapping up so big that it kind of took away a lot of those opportunities, and I was really just much more market focused. I was looking for the opportunity to get short on $10 plus worth of extension, or that's not how I ended up shorting. I ended up shorting because Michael called out that news to us. Again, shout out to you on that. So that's what I was looking for, but I never got the signal. I never got the signal when we were above $400 to really kind of start doing it. And there was always the potential of this market ripping up. We started our day just with that consolidation. I wasn't getting the upside momentum, but I really wasn't getting the breakdown selling either. There wasn't anything to do, I don't think, except for primarily booking profits and longs that you already have on. And broadly, the more time that we're able to spend up here, the less extended we're going to be, and that potentially begins to set us up for more continuation higher. But at this point, we are, I think, still needing a little bit more time with the marketplace. So I didn't do too much. Like I said, I traded a little bit of Microsoft, especially on this. Oh, well, this is when I traded. I traded Microsoft on this pullback, liquidated that position by the close. I very briefly got into NVIDIA, made a very small amount in it, traded that TQQQ, market related, and managed the positions that I already had open and was not very aggressive with them because the market was telling me not to be. So that's all I got. That's all I got. Happy to answer any questions that you guys have. Rich giving me a shout out on my risk management. Good thing that you had properly managed your risk so that you weren't locked out and you could hedge yourself. Yeah, that's a big part of it. Risk management's always number one thing in this business because, if I had put myself in a bad spot already earlier in the day by being inappropriately aggressive, then I might not have had the firepower, will, or ability to be able to, short the market when it actually counted. from Sebastian. What do you think about having a short bias today? I thought we could get a sell the news event and retrace. So I started shorting at the open. I started shorting Apple at 9:36 since I was expecting an inside 5 breakdown and I wanted to have a good risk reward. So it sounds like you cheated. I remember watching this Apple build out here, and I actually thought that Apple was showing a lot of relative strength compared to Amazon at that time or Google at that time. It fell a bit 10 minutes earlier, but didn't get much continuation. Do you think it was a good game plan on a sell-off at the open being a real possibility? Yeah, I honestly don't know. And that was what I was telling the team here in the morning meeting, was that I genuinely did not have a good feel. Like, I think what I said in the morning meeting, and as much as I don't like the term, was it felt to me like a coin toss today. Like, I easily could have seen this market selling the PPI news because it's already priced in, and coupled with the extension, and us coming all the way back down like what you were looking for. But I could also see this market gapping up to where we were, people still being caught wrong-footed, and a whole nother layer of short squeezing momentum comes in that brought us up to 405 or 406. I really could see either of those situations playing out post PPI this morning when I was trying to do my research and figure out a game plan. And when I'm looking at a coin toss in the market, that generally means I don't have edge. If I don't have edge, I don't want to be involved. So that was my thought process, which inherently means that I don't fully agree with your short bias based on my thought process. The one thing that I probably dislike even a little bit more, though, is that I just felt that Apple, which I was watching all the FANG names really closely off the open, I thought that Apple was the strongest one. So I understand why you went to Apple, because it actually gave a setup. But when you're looking at Apple developing that setup, you want to be looking at that setup with the relative strength, relative weakness layer of probability. And if you're thinking about Apple short and you're just looking at this in a vacuum on, market extension with where we're at, and look, here's an inside 5 setup that I could short, that's fine. But I don't like the trade because you're ignoring the strength that Apple is actually showing. Like, look at Amazon in the first 4 bars of the day today. Look at Microsoft, which was somewhere in the middle. Not as weak as Amazon, not as strong as Apple. Look at Google, which was a little bit more like Amazon, very, very weak early on in the day. So I just felt that Apple, and I was communicating this one not really as a long off the inside 5, but I was just communicating the constant relative strength. So that when the market eventually gave this pivot and inside 5 here as the ADMA caught up, I actually said you could go long on the break of this inside 5 on the market with this low. I said probably don't do it with a ton of risk, because I don't love the probability of success with the degree of extension on the daily chart. But now that this ADMA basically caught up to price here, and the IWM, which I didn't love either because of the degree of the sell-off, was also giving a pivot, I was like, well, what's showing relative strength that we could look at to go long? And Apple was one of the more relatively strong stocks I was looking at as a potential long there. The only problem I didn't like Apple here was I didn't like the actual setup on how it kind of came in. So I think I called out, what did I call out? Not Microsoft. I don't remember. Google, maybe? I actually think I called out Google and Amazon, even though they were weaker, so it's a layer of probability that's against me, but just because they actually had the setups. So actually, I probably did the opposite to the long side on my call-outs in Amazon and Google to the long side that you did with Apple to the short side. Whereas I'm kind of, saying I don't love your trade because you're shorting a relatively strong stock. I then turned around 10 minutes later and called out the long because of the market signal in the weaker FANG names. So that's a layer of probability that's against it also, and probably not completely ideal. But yeah, that's kind of my thought process there. Also, what do I think about shorting AMD at 9:45 on the double inside 5 breakdown? I called out the same thing for NVIDIA, actually, at that time. I said you could try to short NVIDIA on the break of this bar versus this high. And I actually tried to hit it, and my tier size was off by a lot. I had an extra 0 in there, so the order didn't go through, which was a good thing because then I kind of missed the entry and I didn't want to get involved late, so I didn't really take the trade at it I got a little bit lucky there where it probably saved me a few bucks. But yeah, I was looking at that too. Not with AMD, I was looking at it with NVIDIA. But the degree of extension on the daily chart in AMD and NVIDIA is just like mind-boggling with where these things are at right now, which made me like that setup, especially with a weakening market. From Mark, what do you guys think about Shop with the close? Yeah, it's not a great candle. And I'm out of Shopify. I got out of it 2 days ago. I got back into it yesterday. Took 2 day trades in it yesterday, made a few bucks, and did not keep it overnight. I'm out for the same reason as I'm out of Snap, as I'm out of Pins. It's not only that they got to my targets, but it's that they got to my targets while being extended. If they got to my targets and they weren't extended, I probably would have kept a little bit just for pure trailing. But they got to my targets and were super extended into my targets. So my thought process is to... Those are false prints right now in Shop that are messing up this candle. My thought process is to just kind of be patient on these. I want to get back in them, but I don't want to... I mean, I was in Shopify from the move, for this entire move from $25. This was a great move. $40 is a really, really big resistance level. It's extended into it. I would rather miss a move to 45 than like be chasing new entries into these prices right now. And if anything, this candle indicates what I'm potentially looking for, which is further price correction or time correction, but probably price correction that can create a setup for me to reinitiate my position. You know, this thing starts getting back to $38 or below $38, you know, maybe 37. ADMA right now is at 36.50. That's where I'm going to look to begin to piece into it. From the short perspective, and I hate that we keep getting a false print that's messing up the daily chart, the daily candle here. From a short perspective, a shooting star candle in extension is exactly what you look for to be short off of. You just got to recognize what type of trade that is. I tend to take this type of trade much more to the long side than to the short side, where you get the complete opposite. You get downside extension, then a hammer candlestick, and you go long versus that low. But this is the exact same trade that I do to the long side. It's just the short setup. It's a counter trend trade on a shooting star candle. The same way that I just said to you that this candle indicates retracement, and I'm excited about that retracement because I actually want to get back long after price correction. That can also be an opportunity to make money on the short side on that counter trend trade. The counter trend trade, in my opinion, is always the more difficult trade. The better trade is always going to be the with trend trade. And like we've spoken about, you know, for myself personally, I am a better trader than I'm a better trader to the long side than I am to the short side. I can trade in both directions. I don't even necessarily know if I'm a better trader on one side than the other. I would say I'm just much more conservative on one side than the other. That's probably the best way to really say it. So I'm much more conservative on the short side of the market than the long side of the market. But this is that exact same setup. You could be short tomorrow morning if it's the same price versus this high, and you're looking for a move. Target number 1 is the 8 EMA, target number 2 is the 21 EMA. And those exact same short targets are the spots where I would actually be looking for long setups to come back in to get back in there. Yeah, well, if you're already short, I like it, especially if you're short from a good price. You know, I always want to have that profit cushion, especially with these types of stocks. You never know what can happen with these types of stocks overnight. But especially if you got the profit cushion there to hold it overnight and look for a further move to the downside, I like it a lot. From Joseph Daly, Trump announcement tonight. Any thoughts on this related to the market? I don't think that that's going to have a huge effect on the market overall. I could be wrong. It might have an effect on like a DWAC. I think that the market is generally expecting that that's what he's going to be doing tonight, is announcing that he's going to be running. So I would think that's already priced in to some degree. I also think that it's so early that it's not going to have an effect on the market, because just because he's running doesn't even necessarily mean that he's going to be the candidate. Doesn't necessarily mean that he's going to be in the primaries. You know, you got the guy down in Florida there also, who at this point is like becoming a really big competitor to him. So I think that it's something that we'll have to pay attention to because of how it affects markets. But I don't see tonight's announcement from Trump, assuming that he is announcing that he's going to be, running for president, I don't really see that affecting markets too much tonight. From Francisco RTX. Cup and handle on double time frame. I don't know what double time frame is. Aerospace. Oh, on multiple time frames, you mean? I see it on the daily chart for sure. I see it on the daily chart. Aerospace sector looking to break pre-COVID highs. Yeah, it's also part of the defense sector, right? RTX. Yeah. So. Yeah, I mean, a cup and handle is a continuation pattern. I guess you could argue that it's a continuation of this broader trend, even though there's been a big consolidation here. At this resistance level, here's your big cup. This is not the best looking handle that I've ever seen because it's just 3 candles. But yeah, I see it. The resistance is a little bit sloppy, let's call it the space between 96 and 96.50. So if this thing's able to start getting above 96.50, it really needs to negate this negative Maribozu, which is 97.20 high. Then yeah, you're breaking a resistance level, and you could be looking for higher prices, and it makes sense for these types of companies to be performing right now, I think. And your technical continuation here would be, let's call it $16 of upside on a break of $96. So yeah, I mean, that's a big upside move, but that would be obviously a multi-week swing trade that you'd be looking at there. So a lot of times when I look at a pattern like this or a head and shoulders pattern, I don't want to trade the cup and handle or the head and shoulders. I want to use that as a layer of probability. Meaning I know that if RTX is above 96.50, it's above resistance and there's a cup and handle pattern. Therefore, my smaller time frame trades are going to be better off being long than short. I got the layer of probability on my side. So that's how I think about that. What else, guys? Anything else? No problem. Happy to wrap it up if no one else has anything, and we can pick things up tomorrow. So I guess let's call it. Have a great night, everybody. I will see you all tomorrow morning. Adios.